December 24th, Christmas Eve day. If you're here today, you're a true fan and not out doing that last minute Christmas shopping. Maybe you're buying some Nikes like Tim Cook. That's a stock we're going to be talking about. Good after hours action in Nike. We have an S&P 400 ad. We got Omer halted. Intel going back to being Intel. On a day like this, who do you want to talk to? What kind of guest could just bring us the most information in the least amount of time? You got it. It's Ryan Dietrich. Let's get this pre-market prep on Christmas Eve day started right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Let's get things started. These charts are brought to you by TradeStation. Chart, analyze, customize, all in one platform. And it's been spending some time figuring this thing out, folks, and I'm going to relay all that information to you starting in the new year. S&P's an 8-point range, down $1.25, 69.59.75. The buck week again, down a nickel, 97.56, right back to the low of the move. TLT boring, hanging out just above 87, 87.61. USO flat, 70.36. Gold and silver going in opposite directions. GLD down 84 cents at 412.80. SLV up 54 cents at 65.38. And Bitcoin just wallowing here in the upper $80,000 handle. Those futures are down $380 at 87,760. Triple D lurking in the background. And Dennis, there are slow days in the market, and then there are slow days in the market. But how you doing? You doing okay?
Yeah, no, we're good. It was very slow last night, so we traded. We trade from 3:30 to 5 live in the STN room every night, and it was very slow. But we had one trade, and I'm pretty sure a lot of people made a lot of money on it. I know I did really well on it. And Brentster, you can come in because it was funny. I'll just set it up. So last night we get the Nike board member that bought shares, and it was Robert Swan Holmes, buying 8,691. And I just got done saying it wasn't really moving. They bought it 57.54. And then I said to you, keep your eye out, because when you get one, sometimes you get more. Literally 30 seconds after I said that, Brentster, you're like, Tim Cook just bought 50,000. I was like, this is the Tim Cook? Like the Tim Cook?
Apple?
And you're like, yeah, he's a board member. I'm like, I'm pretty sure he's a board member. And then you dig down, you're like, sure enough. So you're like, boom, 50,000 shares, Tim Cook. Stock and holiday trade still wasn't moving much. We were able to buy 57.40, 57.45, 57.50. I bought 57.55. And I was like, I'm loading it up, because I'm like, I think by tomorrow, I think people will start to realize that, hey, this is a vote of confidence from one of the smartest people in the world. So he did double his position in the official. He had just over 50,000 shares that he had from, being a board member. Yep. Give us those details, Brentster. Actually, I'm taking away all your.
No, you're fine. No, you didn't. No, that was great. Yeah. So Tim Cook has been the main independent board member for Nike for like 19 years. We didn't realize this last night, but as I'm researching it, I'm reading all these articles about how Tim Cook goes and makes public appearances, and he has like these one-of-a-kind unique Nikes on because he's like the only independent board director. Something else to consider. As far as I can tell, this is the first time in 20 years that Tim Cook has actually bought shares. He had those 50,000 shares that were like accrued, you kind of hinted at it, Dennis, for like being a board member. But I looked back a bunch of Form 4 filings, and none of them were purchased. You want to look for that P in the Form 4
the open market.
filing, the open market. So, Dennis, you were like, we were kind of like, we were kind of excited and a little surprised by this. And you were like, I kind of like this. You were like, this is how stocks can turn around. these little votes of confidence, especially we say this on Stock Trader Network, especially when it's a notable name. And like
Yep.
Tim Apple, you don't get much more notable than Tim Apple.
Tim Apple.
We call him Tim Apple now. That's his new name, Tim Apple. But yeah, so I mean the setup was clean. There was multiple like big sellers after hours too. I actually questioned it. I'm like, it's just not going, but I'm like, I think I'm going to hold on to it because I think it'll go by tomorrow. So it took forever. And Joel, if you go and scroll into the pre-market chart, you'll see the action. That filing broke at 425. This stock really never got above like 57.5 for like a half an hour. So you had forever on this one. And, then the slow, steady climb all day. Social media starts to pick it up. They start to bounce around a little bit. And, obviously the filing. And then you had like unusual whales, some bigger ones tweeting it out. And, now we are obviously up a buck. I've sold some into this because I was like, I think it's worth a buck. That's what I said in the STN room. I think this is worth at least a buck. I've still held some of the position because I think some of it might actually be worth more than a buck. I mean, Nike is in the gutter. And we've seen this, when stocks are in the gutter, the insider buys really help because it's a vote of confidence for the stock. Now, we didn't see a CEO buy, and the reason you're able to get this is there's an algo that is programmed. When it sees a CEO buy, it automatically buys the stock up like 1%, like sweeps the book and buys everything. But these weren't a CEO buy. It was a director buy and Tim Cook buy, who's the director as well. So that's why we as humans probably had a better opportunity on this one. So it worked out really well. Also, holiday trade.
Yeah.
Slower right now. Like there's opportunities for those inefficiency traders because there's not as many traders, combing the headlines and finding everything that's moving there. So, what was it? The night before was NVO. And, I was able to get short Lilly and Hershey. And, I was talking about McDonald's and those stocks really tanked. And that made my day yesterday. But, in normalized markets, maybe there's more bots running, there's more people running, more hedgies running. But right now, there's a pretty good opportunity, actually. So sometimes this holiday shortened week can actually be pretty darn good for trading if you're willing to take the time to trade.
Can you give us the mathematical formula that you used to determine that was worth $1?
Ha! No, it's all just feeling. But it goes from experience. Like, and we've had some requests to actually cover more insider buys. We do cover the notable ones. I mean, we could do a segment even on Stock Trader Network or a small one here, like here's your notable buys for the day. A lot of days there's not notable buys though. Like there's always some insider buys, but they could be on, like Moshkovich. He buys his stock, Asana, it seems like once a week. He buys huge stock, so it doesn't really move it anymore because traders have become numb to it. It's like, oh, it's Moshkovich, just buying more shares. I mean, he's nobody believes in his company more. The guy buys like $5-10 million worth of stock, it seems like every week for years now. Doesn't seem to matter. I don't know if he's eventually going to take it private. I think there's a possibility he might because he's buying stock. I think last time we looked, he owned over 30%. But there's just not always a lot of notable buys. Like there's always, when we do ratings, there's always some upgrades and downgrades, although today's not a huge day for it. But
no.
For insider transactions though, and sometimes the sells, like why don't we talk about the sells? Because there's always sells. There's always people selling because one, they need to live. A lot of these directors are only paid for, in stock compensation. So they don't sell, they don't pay their bills. Two is, there's just always, it's like people care more about the buys. The reason they care more about the buys, there's only one reason to buy a stock. And that's because you think it's going higher. So obviously with, it's not a huge position. People are pointing out this is a nothing burger for Tim Cook. The guy's, what's his wealth, billionaire. Yeah. But yet, it's still a vote of confidence. It's still saying something. People like to be right. It's not always about making money when you're at that level. You like to be right. So he wanted to make a call and say, look, I doubled my position here in Nike. That he thinks it's obviously oversold. Well, if he thinks it's oversold, maybe some other people will join him, and that's what you're seeing happen here this morning.
Sometimes you have those moments where it just like there's not the reaction, and you're like, come on, like where are you? Where's the rally? Because I'm looking at the chart here, and it just look, like usually on these kind of things you see a spike, and then but this was just chug, 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 and these are 15-minute charts here. we always talk about a catalyst. The stock needs a catalyst, right? And Nike needs a catalyst. I had a real quiet day yesterday. As always, if we want to look at some levels, keep an eye on your pre-market high, but just realize the news is out. It was disseminated last night. And 5908, did we get to 5908 yet? Yeah,
No.
I think we did.
Yeah.
You got to 59 this morning?
No,
I
I'm
don't know.
looking. I'm looking to Brentster.
I see high I see this morning is 58.91. Does that look right?
58.91, Dennis.
That's a
Did you get
big
up at
news
4?
though.
Did you get up at 4 and take a hot shower?
I'm still in some of it. I've sold some of it because
Okay.
I thought it was with $1, and now it's $1.40. So, but you look at the
There you
chart,
go.
you think it could go to 60. I mean, this thing's beating right up. It's been in the gutter. So if this gets it going here a little bit, also one thing to consider is the coming January effect, where you
Oh.
obviously have this as one of the worst stocks of, maybe not one of the worst ones, but not a great one of 2025. So there could be a little bit of selling pressure, from tax loss selling here still coming. But, January effect, that goes away. So I wrote it down on my January effect list here too. Not a superstar because it started the year around 70, but, well, actually right around 70. So it's not down a pile, but it's got the candidacy there to have a little bit of a January effect where leaders become laggards and laggards become leaders. Nike's an eternal laggard. So I wrote it down on my January effect list, but I'm going to be selling these shares here this morning because, it's up and I bought it for the trade. I thought it was worth more than a nickel and a dime and 15 cents when it was still trading down. Is it worth $1.40? It's probably getting fully priced. You know what that's worth. Now you might get more director buys. Maybe this gets a story going. Maybe something else happens. Maybe Tim Cook knows something. Probably not. He just, is giving it a vote of confidence. It's what the stock needed.
I recently got a new pair of Nikes. Lisa got me a pair for my birthday. And a real nice pair of Michigan Nikes. I haven't had a pair of Nikes in a while, but I think the still overhang on this one too is the tariffs. I know we haven't talked about tariffs in a while, right? Because on again, off again, but we'll see what happens with that. But yes, Nike.
Do we have a number?
We have a number at a data number. We have a data number at 8:30. Let me double check. I'm pulling up my calendar right now.
Okay. Keep us posted there, Brad, on the numbers.
I
what is
see
it?
we have jobless claims at 8:30. The weekly jobless claims at 8:30. We're looking for 224,000 jobless claims for last week. 8:30.
Usually a nothing burger, but in a shortened holiday week here, any data is going to be looked at by whatever traders are at their desk. And believe me, there's a lot of traders that are not at their desk. And remember, today there's going to be no traders at their desk really after 1 o'clock because we have a shortened trading day today. Markets do close at 1 o'clock. The after-hour session goes till 5 o'clock. So if you're trading, and you want to know, we're going to be in the STN room till probably 1:30, 2 o'clock, and then we'll probably call it maybe 1:30. So there'll be some trades. So there usually is on these shortened holiday days. So Nike was the big story of the night. But there's also this Intel story here that's happening here this morning, and Intel's getting hit. It's a Reuters report that Nvidia halts their tests on Intel's 18A manufacturing process here. Basically saying, well, I don't know if there's some more information here than this. Well, I can dig in a little bit here. Stock dropped 2.7%. We know that. Accordingly, Nvidia has been evaluating whether it could manufacture its chips using Intel's advanced 18A production technologies, but decided not to move forward with the tests. So we know they were going to work a little bit with Intel here. It appears somewhere here that, or appears that at least on this process that they are not going to be using Intel here now, that they couldn't cut it. Shockingly, Intel's, manufacturing process isn't good enough for Nvidia. Shockingly is called sarcasm. Because Intel has just been one of the worst, obviously companies run here in the last 25 years.
As far as I can tell, Intel has a patent on this manufacturing process, and it seems like they laud this process. This was supposed to be on their website on Intel.com. It says 18A is our biggest process innovation. This is for the AI era of foundry. So I mean, you know, like they could certainly have made money on Nvidia from this. I will just say that.
I mean, repercussions here too. Thinking about this and just reading actually from Reuters report, testing halt. A halt raises questions about the technical viability of Intel's advanced manufacturing process, which company is positioned as crucial to its turnaround strategy and efforts to compete with Taiwan Semiconductor in the foundry business. So Taiwan Semiconductor is trading up on this report as well. TSM's trading up $1.50. So you have some movement here. And remember, I really believe moves are muted here right now in this holiday trade.
Definitely.
So, just keep that in mind. You dip buyers coming here and saying, oh, Intel's a great company. It's not. Intel hasn't been a great company forever. I have an Intel chip in the one computer and it never works. So, I mean, maybe they're improving. The thing is 3 years old, but I tell you, the one with the AMD chip kicks butt. So we do have the government. We do have Trump support. That's all good news. But Intel has been the dog of all dogs, one of the worst run companies in the last 20 years. You think about where chips and these stocks have gone to, and then you look where Intel is. 2019 we were $66. So, in that same time period, Nvidia is up like 1,000% and Intel's down 50%. So when you're all getting antsy in your pantsy investing in Intel, just remember this is a pretty crappy company.
This like if you did a volume profile over this thing since October, boy, there's been a lot of trading going on between 36 and 38. You spent some time above, you spent some time below, but I think there's a lot of overhead resistance here for Intel. They had a big run off the Trump pump, right? You start to give it back. Part of the reason for the rally was the Nvidia deal and the administration behind it. I mean, you can look at other stocks too that got the pump. MP Materials, goes to triple digits, gets cut in half here. So looks like the bloom is off the rose. I can't find you great support, but what I can tell you is you got a real battleground developing here between 36 and 38. And the longer it takes to clear those, today we'll just start with 36 and a gap fill. I don't like what's underneath here in Intel. I know it's trading down 93 cents. I don't know about selling it in the hole, but man, I think the sellers are going to be lining up at 36 here.
There's also underneath some demand here too. Like you got
so?
the low of the move at 32.89. It's a logical spot. Not getting there today, but is it on its way down there? It's also been a laggard. Could you have a January effect here? Maybe, but it's had a pretty good year actually coming back from its lows. I think there's underneath demand. I think there's overhead supply, which makes me think this continues maybe to go sideways for a while. It needs a positive headline. This is not that.
No, definitely not a positive headline. And just adding significance to this $38 level, it's the 50-day moving average. So I think you got a wall here in Intel, unless they can find something to flip it on. I'll throw the major stars out there. That's where I think the institutions, I don't know if they can't get out if they can get back over 36. I think 38 could be a major roadblock here moving forward. And I don't know. I mean, do we get a gap fill down from at 25, 26?
I don't think you're getting that anytime soon. I think there's going to be buyers way before that. So let's not put the cart before the horse here, Mr. Elconin.
Okay. All right.
Continuing with our news parade, ASTS, which has been on the most incredible run here in the last 3 weeks. It's went from $52 to $88 here now. This is like, I'd be selling into this because this has just been an incredible run. Rocket Labs too. Both these stocks have had incredible runs. I think both these stocks could actually do offerings too coming up because both of these companies, are still in cash burn situations here and they need money. And when your stock goes up as much as these two stocks have went, ASTS is up about like 70% in the last 3 weeks. Rocket Labs up about almost a double in the last 3 weeks, which is absolutely incredible. I mean, I think it's ring the register opportunity here. I know there's people who believe in these long-term stories, and if you're long-term, I don't. It's hard to value these companies when they don't make money, but short-term, these are just overextended moves.
On the ASTS, I just wanted to say that this successful launch for the Bluebird 6 happened last night at 10:25 p.m. And if you had to pick like a not exactly buy the rumor kind of thing, but if you had to pick a like sell the news moment, it's got to be one of these satellite slash orbital launches. Do you know what I'm saying? Like after the deal, after the launch happens, it's like okay, cool. We're feeling a little bit more confident about this here, and I feel like that's maybe a little bit of the reaction in ASTS today.
Boy, I'd be licking my chops here at $90 if you could get here. 89.64 was the high on October 20th. You had a monster range day there. You hit 89.64, but you closed at 82.81, and then you continued the descent. So I'd be looking the pre-market high, or was it an after? Yeah, it was a pre-market high, 89.40. Man, there's a sell zone for you if you're looking, if you got caught in this thing and on that vicious break from 100 to 50. That's what MP did too. Just a quick snapback rally, thinner holiday trading. So nice gift here. And isn't it more because the satellite like didn't crash and burn? That's like everyone that is the catalyst behind it more so than like any
Yeah, that
material.
that's kind of what I was trying to say. It's like yeah, either you have this thing that is not going to end. They're either going to call it off, they're going to call the launch off. It's going to end poorly, or it's going to end successfully. It's a very like polarizing type of news item. These launches.
Yeah, I mean, didn't Lunar like have something tip over or something? And
Lunar had a yeah. No, I wasn't Lunar the one that tipped over. Was it Lunar? The thing tipped over. He launched to the moon and then it tipped over on the moon. The first one was
I
good.
think
And
it
the
was
second one
lunar.
tipped
Yeah,
over. I think it might have been Lunar.
I think you're right, Joel.
What a smooth that's had. Like these space stocks have really exploded here. But again, we're still in this market where I think the jury's out to a certain extent. A lot of these Momo names were really killed and they bounced back a long ways. So I think eventually you run into profit takers here. And it's been a good run. I mean, let's be honest. Martin's saying, isn't this the start of the Santa Claus rally? It is. Today is the official first day of the official Santa Claus rally, being the last 5 days of December, 5 day trading days of December, and the first 2 days of January. Remember, though, the Santa Claus rally, as Jeffrey Hirsch, who obviously his father, came up with the Santa Claus rally from Stock Traders Almanac, will come on this show, and he's been on a lot of times, and he tells us it's more a predictor than it is a thing. Like it's not always the Santa Claus rally happens, but when it doesn't happen, it usually means bad news for stocks in 2026. When it does happen, it usually means good stocks first, or good things for stocks in 2026. So it's not always necessary or absolutely certain that stocks are going to go up in this period of time, but they do show seasonal strength quite often in this period of time. So keep that in mind for the Santa Claus rally. And speaking of the Santa Claus rally here, we had this. This is where I was going. That we've had, they've front run the Santa Claus rally. I mean, you think about the moves that we've had here in the last 3 days, 4 days. Qs were $600 5 days ago. Now it's 622. SPY made a new all-time high, or close to. The futures did. Maybe not SPY itself because of the ex-dividend. But I mean, we kind of front run the Santa Claus rally. Like that's what's happened here in the last 3 or 4 days. So are we expecting stocks to continue to go up here? I think there's question marks on that.
it was a explosive rally off the open yesterday. I was really impressed. We late. I can't remember. Do we have econ data? I can't remember what hit us in the pre-market.
We had the really strong GDP. Is that what you're thinking?
Yeah. And then boom, they came in off the open. We'll see if that happens today. As I said, an 8-point range overnight, which is really one of the smallest overnight ranges I've seen in quite some time.
Really quiet holiday trade. Ryan Dietrich going to be coming up in 10 minutes. Those jobless claims numbers going to be coming up in 5 minutes here. We do have a deal this morning, Brentster. What's this deal? Sanofi buying somebody.
Yeah, Sanofi is buying Dynavax, DVAX. The value is at $15.50 per share in cash. I believe that is going to be about a $2.2 billion deal, about a 40% premium that Sanofi is offering here for Dynavax DVAX stock, trading up 40% here this morning in Dynavax.
it was actually just from a technical perspective, actually looking like it kind of wanted to go, but really not a lot of movement ahead of this. So I think they kept this one pretty tight. This is over. So this is a cash deal, correct?
Yeah, let me double check. Yes, I'm pretty sure. Cash deal, yes.
Yeah, so this trade is over here for Dynavax. Sanofi's another one. We've seen a lot of the European drug companies really underperform. And I've recently obviously taken the position in Novo, was happy with the Novo drug yesterday, but Sanofi's got nowhere for like 7 years. Also, I hate the trading tax on it. This is France, and when you sell the thing, they charge you like 0.3% or whatever it is, or 0.4%. I absolutely hate that. Like you sell 1,000 shares of this and you get like a $400 bill, and you're like,
Damn.
why? Because it's the trading tax. And they talked about floating that over here at one time. That would have been an epic disaster and just murdered trading. But I hate those transaction taxes. And that's why Sanofi, I never make a trade on it because I don't like paying the tax.
So 15.50 in cash, and this is like a done deal, and it's trading at 15.54.
And went all the way up.
Yeah,
With a little bit. You know how this market works. Somebody would speculate. Oh, maybe somebody will pay more.
that's what I was gonna say. That's what I was gonna say.
Again. When they start going up and past the price and the takeout prices, they're like, we want more. Maybe AstraZeneca comes in and pays more. Maybe GlaxoSmithKline pays more. That's a little bit of
okay
on that.
The press release says that the transaction has been unanimously approved by the Dynavax board of directors. So at least we are a step further on this, maybe to prevent something like that happening. But it seems like that kind of has been the sentiment in the market. We want more from some of these companies.
More.
Coles wanted more at 65. Remember that?
Yeah, no, I know. Sometimes these things don't work out. Well, Coles, it wasn't so much they wanted more. There just was rumors, and rumors don't always materialize, and they never got the hardcore deal. And obviously now Coles has come way back down here. What do you think? Like, here's a question. What do you think about the retailers going into, this holiday trade? Because sometimes we know Black Friday is a big event for them, but sometimes it can be over the Christmas season as well. Macy's has been leaking a little bit.
Yeah.
Nike was right on its lows. The XRT has come off here a little bit. Is there a play here through the Christmas holiday season or even into potential 2026 for these retailers, Mr. Elconin? Do Kohl's or Macy's? What about Target? Is there any life for Target? Because
there has been life.
It's starting to show death again.
There has been life in Target here. Man, I tell you, the consumer is so fickle. And you're not going to get these results until what? Until you get the Q3 numbers. So the Target had a really nice 20-point move, and now it's coming back. I think if this comes back to that 200-day moving average, found great support there in December and kind of heading towards there right now. That also will be a half of the move. Macy's, I mean, it's curling, it's headed back down, resistance, big run, and Macy's has had a hell of a double this year.
Yeah.
From 12 to 24. So don't have a good feel for these retailers. A&F has been on a tear, right? I mean, that thing, it's still probably the P is bumped up a little bit. It's just so hit and miss with the. I mean, if you put me in one, like a Target or a Kohl's, I mean, I guess the Target, I would know the difference because they have the food. But I mean, these stores just seem all the same to me. And your Walmart, what'd you say?
Just blend in with each other.
Yeah.
Yeah.
Walmart's come in a little bit here from the 116 area, a little bit
most overvalued stock in the market. I really believe that. I'm gonna keep saying that. I would not. I can trade Walmart. I'll trade it, buy it, flip it out. Investing in Walmart at a 41 times PE is nuts.
All right, we got some action. We are going to shake up the crowd here in just a few seconds, maybe.
Going to be so much action. The S&P is just actually
jobless claims.
A penny.
Jobless claims a little better than expected. 214,000 jobless claims for the week last week. 224,000, so 10,000 better than the estimate. Continuing claims from a couple weeks ago, 1.923 million. That was a slight tick higher in those continuing jobless claims. Looks like a bit of a nothing burger here. I mean, we didn't expect much, but market pretty quiet on this.
This is going to be quiet. You're going to be quiet here. Sometimes this holiday short and trade, you can get a little bit of intraday chop, but don't expect a lot of headlines. Don't expect a lot of news. Don't expect any analyst action here because they're all, gone with their families here. We'll start to see that come back. Obviously, a little, January is when they really come out, but, a little bit and maybe into next week as they're trying to get the 2026 notes out, but quiet as she goes.
Oh, yeah. Did you see anything from analysts today?
Let's go look.
I didn't.
There's a couple initiations. Is there any downgrades? We have Raymond James downgrading KB Homes. City downgraded Federal Bank, which I don't even know if trades over here, so we'll ignore that one. So one downgrade, basically, of note. And then upgrades. North Coast, look at this one. North Coast Research upgrades Costco to buy.
What?
We have a Costco upgrade here, folks.
Stock's moving.
It's up about, oh yeah, for sure. It's an upgrade. You know what? Costco, you got 844. You got two lows, 846, 847. I mean, I see defined support here. I kind of like the upgrade. It takes out the low of the move, 844. You got to go. I like that Costco is actually at its lowest multiple in years and Walmart's at its highest. They're almost the same.
Yeah.
When they cross over, that is your trade. Long Costco, short Walmart. Honestly, that's going to be, I know momentum traders roll over in their sleep when I say stuff like that because Walmart has all the momentum and Costco has none. But I'm a fundies type of guy. And when you look at Costco trading at 42 times forward earnings, and you look at Walmart currently trading
at 37.
37. It's not quite there. And again, we were 40 on Walmart the other day, but just peeled off a little bit here. So we touched the 40 and we peeled off. I got to think big resistance on the 40 PE and big support on the 40 PE Costco. So that's a trade for 2026. Short Walmart, long Costco. That's where I'm going. I don't.
There was a little chatter last week about them doing one of their special dividend tricks again. Haven't they done
Costco?
That before? Yeah,
they thrown $5 at you. I think. I don't think it's been crazy. What's the best? I don't know if you can search that.
Who was it? Someone did a $10 one. What was it?
It might have been Costco. It's an $800 stock. Let's look history. Costco special dividend history. Let's go, Gemini. Special dividends. Do they have any? And I'm getting dividend information. I want to know if they've ever had any special dividends. I came up shy. I'm only seeing regular dividends. Oh, wait, 3 in the past 7 years. They did announce a $15 one in 2023.
And they rallied it like $80 off that.
Now, welcome to Wall Street. We're getting $15. We better put that all in the stock right now. In the bull markets, I would say that does happen from time to time.
I'm a little worried. This is one of the larger holdings, and man, just don't like looking at it. I just feel like.
Oh, Jay Rice says we could pull up a chart.
Yeah, I'll pull up a chart of that.
We got to find that special divvies. Looking through. I love a special divvy. Makes me feel special as a shareholder. I love a good special divvy.
Is that how it works? That's why they do it?
Yeah. You want to make your shareholders feel special, and I do.
Ryan
Dietrich, you better come and save this show here. He just tweeted it out. He's coming in here right now because now we're talking about feeling special. As we run out of all of our headlines just in time, Statman's coming up in the background. He's getting his mic ready. He's coming on here really soon here. So we're going to play that intro here, and Ryan is going to save the show.
Ryan Dietrich, aka Santa Believer,
Chief, like that?
Yeah, Chief Market Strategist at the Carson Group. Ryan, I saw you in studio in CNBC. I don't know if I have room for you here in studio, but I saw you on there. How you doing? How you doing on this Christmas Eve day?
Yeah, happy Christmas Eve, everyone, and thanks as always, guys, for having me back. Doing well. Yeah, it was last Thursday in person in New York City there, right at the desk on Squawk, and talking about new all-time highs. I said it can happen this year. We were almost 3% away back then, right? I mean, we had that terrible Wednesday. Everybody stopped believing, and little did I know, 4 days later, we'd be back at all-time highs, but can't complain. Well, I put together, like I normally do, a bunch of slides. You guys just want me to start sharing stuff?
Of course.
You bet.
That's what I figured. I said this could be a record number of slides that I have. So let's see.
That's
excellent,
good.
because we're out of content. We covered every single headline that could be covered here this morning.
I've got plenty to talk about then. Let's see here. Here we go. All right, guys. You should see congrats to the Bulls. We good?
We are good. We got it.
All right, perfect. So again, thanks for having me back, and hopefully everybody's has a nice holiday season and a good run into 2026, which from Market's point of view, congrats to the Bulls. I know I joined a month ago, maybe 4 or 5 weeks ago, and there's a lot of doubters, right? After a 38% rally, a normal 5 or 6% pullback. I don't think it was too abnormal after that rally we had. A lot of fears. We talked about that, a month ago, and sure enough, we've come back to new highs. Made 2 of them so far in December. So the 38th new all-time high. I know I sound sort of like a broken record, but we are in a major structural bull market that's likely going to last a long, long time. And we're going to have pullbacks. We're going to have scary headlines. But as I've been laying out for a while, don't think it's over. And we do not think this is over. We think there's still a lot of life left in this bull market, which I will dig into, and a little bit of our views on 2026 as well. I know we shared this last month. It's fairly rare for stocks, first off, to peak in October. A lot of people thought we did. We peaked on October 28th. The Fed cut rates. That's when all the November shenanigans started. Well, now this year is just kind of an average year because the peak is going to be in December. I don't know when. I think we've got some more new highs coming. Only a couple days left. Santa Claus starts today. We're going to talk about that next. I know, Dennis, I don't know. Are you a believer in Santa Claus? I mean, you seem like you think we pre-ran it. What are you thinking here?
He just got up. Dennis, Dennis is. Do you believe in Santa Claus, Dennis?
He's skeptical. I don't know.
Of course I do.
Okay.
Why would I not believe in Santa Claus? Of course I do.
Okay, good. I thought you kind of
under your tree and your Wall Street stocking if you don't believe in Santa.
Okay, good. Well, that makes me feel better then. So good. So we're going to talk about that right now. Well, not quite yet. Here's what your average December looks like. It is normal to have choppiness the first half of December. It is normal to have kind of a mid-month swoon. It's late in the month. These the games and Santa Claus tends to come to town. Well, no year's perfect, trust me, but this year's kind of playing out so far. We had the mid-month swoon. We had the weakness early. Listen, S&P is up 7 months in a row. One of these months, we're going to have a down month. I don't think it's going to be December, as we've been saying the first all month. But maybe, who knows, maybe January. That's okay. We're eventually going to have a down month. But just, from that point of view, it's a fairly normal December, even though it might not feel like it to a lot of investors out there. Now, here's what we're going to try to get all the believers out there. Santa Claus rally, technically, Mr. Hirsch, Yale Hirsch, started this many, many years ago, and his son Jeff took over and does incredible work over at Almanac Trader. They talked about this a long time ago. The next 7 days, the last 5 days of this year, first 2 of next year are technically the Santa Claus rally period, those 7 days. And as you can see here, those 7 days, everyone, have been higher 77% of the time. There's no combination of 7 days. I looked at all of them. There's no 7 days that are more likely to be higher. Up, what is it, 1.27%? Again, really strong. Now, I think what most of us should pay attention to is when Santa Claus doesn't show up, that's when there could be trouble. And that's on the bottom there, before the 2000 peak, before 2008 or 2008, Santa Claus didn't show up. Even last year, right? We didn't get Santa Claus last year. And I know this year's a solid year. We're up 17, 18%, 19% total return on the S&P. Who knows? With another rally, we might hit 20% total return 3 years in a row. So clearly it's been a good year for investors. We'll talk about that. But the first half of the first 4 months this year were not very good. And it's not because of Santa Claus. I get it. It's because of different things that took place with tariffs and policy. But the reality is we didn't see Santa last year, and it was a rough start to the year. So those are just some things to think about as we head into it. Now, last one, we haven't seen Santa in a long time. The last 2 years, there was not a Santa Claus rally. You can see here, that's fairly rare. 2 other times, guys, went back-to-back years without a Santa Claus rally. But, this is the 3rd time. We'll see. So I know this is real short term. I am more of a bigger picture macro talker, macro thinker, macro investor. I'm talking the next 7 days. That's not really my wheelhouse. But I will say I think we're going to be a little bit higher over these next 7 days for some of those reasons I just mentioned. Now, big picture, this is the kind of the technical stuff I love to look at, and the listeners probably like this stuff. If you look at high beta versus low volatility, I think this is a weekly chart. Yeah, good. This is a weekly chart. We're likely going to close at a new weekly all-time high on this, right? I mean, this is one of those risk-on measures that tell us things are okay. No, this isn't perfect by itself. You can find flaws if you look close enough at this. But this again says that the bulls are in control. I know that doesn't sound too crazy to say, but just a month ago, everybody didn't believe. And just trust me, I was in New York a week ago saying new highs are coming. People look at me kind of funny. I mean, it wasn't that far away. But now we can show another bullet point for the bulls. One more. I love looking at market breadth. The advanced decline line on the New York Stock Exchange, on the S&P 500, just made new highs yesterday. Right. So again, history tells us market breadth peaks anywhere from 6 to 12 months before the ultimate price. It was never 7 stocks. I come on with you for 3 years saying it's not 7 stocks. We heard I joined you last month. What were we all talking about? Well, not everybody. It was the Hindenburg omen, right? We spent a lot of time on that. I noted since 1970, there have been 191 instances of a Hindenburg omen. When I saw that, I was like, yeah, some of them took place before trouble, but you know what? Most of them took place in bull markets. And that's what we talked about a month ago. It was never this big worry that they tried to sell us on, in our opinion. And when you look at market breadth on the top, that's the New York Stock, or so that's the S&P 500's advanced decline line, simply went sideways for 4 months, consolidated after a heck of a run, and now it's breaking out again. So to us, breadth is confirming this big picture structural bull market win. I didn't put too much on this, but I'm still a broken record of what we like. We like the cyclicals. We like industrials. We like financials. We're even weight technology. I know it's had a heck of a pullback. We still like that. Communication services. We do have a little bit of utility. We're actually overweight utilities, not your father's utilities. And I get it. Utilities pulled back a lot. Actually, it's one of the groups that have. So to me, utilities are kind of that adjacent AI play, obviously, for all the energy we need. So listen, that's a group that's oversold. So I think utilities looking out into next year is another one. So those are some areas we like. We're still not overweight to defensives. We're still not overweight bonds. We still like stocks. And I don't have this, but big picture, you know what? We're almost up to $55 billion. It feels like just the other day I was telling you we're 50. So Carson's growing, got a lot of advisors coming. It's great. And the market's going up. So those are positive things. But we, for our RIA, kind of hard to say, we probably have more international developed exposure just about anybody, and we started adding that earlier this year. We're still in that camp. We think to have a globally diversified portfolio for this bull market with areas like literally everywhere around the globe, and everywhere on the globe's breaking out for the most part. We don't think that's going to end. We think next year we're going to see more of that, so U.S. will do just fine. I wouldn't be shocked, though, if other parts of the world still did better than the U.S. next year, and that's why you want to have some exposure there. I share these a lot. We'll just show it real quickly. Volatility is a toll we pay to invest as we head into next year. These are things to remember. I think one of the people asked, what's your biggest surprise this year? The biggest surprise to me was the market was volatile. Everybody freaked out, acting like it's never happened before. Every single year has scary headlines. Every single year has a couple bad days. I came on with you guys back in March and April and said, hey, listen, some years have a 4 or 5% drop in one day, and they still gain 20%. I didn't know if this year was going to do that, but we were talking about those concepts. You can see here on average, you have a 10% correction. I bet we have a 10% correction next year at some point. I just think that's probably going to happen in a midterm year. Got some midterm year stuff coming up, but just from a more of a longer term investor point of view, the stock market's the only place that things go on sale and everyone runs out of the store screaming. Just remember that as we just a couple more big picture things. The average year gains about 9%. Only 4 times the last 75 years we gained between 8 and 10% on the S&P 500. We didn't think this year, when we were up 10%, a couple months ago or so, was going to be another one. We said this: either the market's going to sell off a lot or it's going to rally, because you rarely are average in this world. Well, sure enough, we see what's happened. You see on the right, a big gain. 19% is the average year when you're higher. We're not that far from that as we talk right now. I mean, we're like, that's price return, I believe. But nonetheless, bigger swings, bigger moves are perfectly normal when it comes to investing, and that's where we are. Earnings have been strong. Don't need to say too much more. We all see this. This justifies this bull market. Also, profit margins. I've said for 3 years, the dual tailwinds this bull market are higher profit margins and higher earnings. Well, we're going to release our outlook in a couple of weeks here at Carson Group. Broken record, we have another section called the dual tailwinds to a bull market. I've been talking about these for 3 years. They're still in play. To us, again, structural bull market being led by higher profit margins, higher earnings. Those are positive things. This is a proprietary indicator. I work with Sonu Varghese. A lot of people know Sonu. Do a podcast with him called Facts versus Feelings. Check that out if you like the stuff we're talking about. This is his proprietary indicator. So, kind of like, oh, gee, just like Madoff said, what's proprietary? I can't tell you what's in there. Anyway, I'm going to do the same thing. But this has been correct on the economic front on the U.S. and the globe. Our proprietary leading economic indicator never said there'd be a recession this time 2-3 years ago. Everybody else's was. We pushed back against that. We're seeing reacceleration in a lot of the data, and I get it. We're missing some data. Government shut down. I get all that stuff. But we think there's going to be a reacceleration as we get past the tariff stuff and into next year, which will be a positive. I could spend all day on this. I'm not. This economy is still low, higher, low, fire. I mean, that's the reality. It's low, higher, low, fire. It's not perfect. I mean, we've got like 7 months in a row where jobs are up, down, up, down, up, down. That is not a healthy labor market. We get it. Okay. That is the issue out there is the labor market. But then you look at consumer confidence yesterday was low. But then you look at GDP came in way more than expected, 3.5% consumption growth, right? So consumers are still spending. Is it a K-shaped economy? Yes, it is. As a stewards of assets, our job, my job is to look at the aggregate, and the aggregate on this economy to us still is pretty darn positive. The labor market is the worry with immigration going on and all the different policies, and don't need to get into all that stuff. And then all the stuff that happened with the tariffs. We think we're an economy now that needs about 50,000 jobs to continue to grow. This time a year ago, 2 years ago, it was about 150,000, maybe 125. So our economy likely still grows next year. We will continue to hire. We got some better news in November on the jobs front. Again, as we get through the shock of the tariffs, we think that's a positive. Same as it ever was. These were the things we talked about a month ago when I was on with you. I mean, when you see how markets could topple the economy with, I'm assuming it's Santa Claus, pointing down on the economist, all the market's done is go up since then. I mean, that's how this stuff works. And the CNN fear and greed, all the negative sentiment we were seeing, that's where things happen. Now, I will say, we are even weight technology. I want to be clear. So that doesn't mean we're underweight, doesn't mean we're overweight. There's like 28% of the stock market's in technology. When you manage money, we manage a lot of money. You have to have some tech exposure. We still think it's an area you want to have. But when I see covers like this, everybody, with Jensen as a Financial Times Person of the Year, you've got all the AI leaders, Time People of the Year, Time Person of the Year. The Mag 7 hadn't been so magnificent. Only 5 of those stocks are outperforming. So just some things that we're thinking about going forward. Again, Dan Ives has been very right. I don't know, lots of other people say we're still in the 3rd or 4th inning of this AI stuff. I mean, I'm not one to be smart enough to know if that's true or not, but I will just say from a portfolio point of view, I don't think I'd be wildly overweight some of these names when I see some of those magazine covers, but equal weight I can live with as a portfolio manager. Just a few more. Lucky number 7, S&P is up 7 months in a row. This month's probably going to be the 8th. I think we probably will be higher. We're gently higher on the month with Santa Claus coming. But the reality is we're going to have a down month eventually. Maybe it'll be January, just end it. I kind of hope we were going to be negative in November, to be honest. We popped positive right at the end just to stop talking about these monthly win streaks. But we are here. So when you're up 7 months in a row, right in front of you, you can see it 3 months later, 6 months later, higher, 14 out of 16 times. I don't make them up. I just report it. So again, this breadth and this strength, this long monthly win streak is not bearish on the surface. So this is the sentiment stuff, right? The consumer sentiment. Listen, the consumer says one thing, and then they do another. We've been seeing this for 3 years. I've been talking about the soft data versus hard data. You guys have been talking about. Everybody's been talking about it. But the reality, which one is this? This is the current economic conditions, lower than a 100-year pandemic, lower than the GFC, lower than the recession of 1990. What you pick it? It's right in front of you. I don't think that makes a lot of sense. I do think there's a lot of politics going on in here, but the reality, people still don't feel that great. But when you look at the data historically, a lower consumer confidence number is better from an investment's point of view because the expectation is lower. So we'll just keep that real simple, and that's where we are. But we do think the economy will improve next year. Interest rates are probably going to go lower. Fed's going to cut. Going to talk about that stuff. Net positive. Okay, good. So here's the Fed. I shared this with you for a couple of years. And they just did it again. The Fed cut near all-time highs just, 2 weeks ago? 2 weeks ago. 22 times the Fed cut near all-time highs. The S&P 500 a year later is higher 22 times. Again,
wow.
What it is. There's the old saying, don't fight the Fed. This isn't just the only reason to be bullish, but when you look at the other things with a dovish Fed, and Sonu does incredible work on this macro stuff. Fed fund futures are saying to be about 2 cuts next year, maybe 2.1, 2.2. We'll just call it 2. The dot plots said to be like 1 cut median next year. We think it's going to be like 3 or 4. And we don't think it's because the economy is slowing down. We think because inflation's improving. I mean, the shelter has really been coming back. We just saw that in that CPI report. I get it. There's issues with that recent CPI report because of the government data collection and shutdown. But going out into next year, we think the bigger worry for the Fed is the labor market, not inflation. So the Fed continue to cut, economy can hang in there. And look in history, everyone. We might have a little bit hotter inflation with the Fed cutting. That doesn't mean the end of the world has to happen. I mean, dovish policy with a little bit higher inflation is actually bullish for stocks, right? Now, maybe we get more trouble down the road in 2027, 2028. We're talking right now into the next year. This is still a net positive. The hatest rally ever. There's lots of ways to look at sentiment. I think only have a couple more. The AAII sentiment poll is one of them. I think a lot of these people are in the Mag 7. I think a lot of these people are in crypto. That's why they don't feel as good, even though the market's up. But the reality is 10% more bears than bulls this year on average, and the year's almost over. That's only happened like in 1990, 2008, 2022. All big down years, all bear markets. And now this year. So again, there's a good amount of, in my opinion, skepticism. And just the anecdotal point of view. I travel the country. I get to work with the best financial advisors in the country and talk to their clients. I don't hear a lot of optimism when I'm talking to clients. These are people who own small businesses, are out there working, have worked on nest eggs for 30, 40 years, and have a lot of money with the market doing what it's doing. There's not a lot of optimism. And in my internal clock, I kind of like that because I saw a lot of optimism late 21. By late 21, look around, everybody's making money. Government gave everybody money. Everybody's like day trading, all this crazy stuff. And then 22 happened. The stocks had a bear market. Bonds had their worst year since George Washington was president. And gold was flat. It was a terrible year for everybody out there in 2022. I'm not seeing those things right now. So that's a positive next year. Real quickly on 2026. When you don't have a recession, which is I've hopefully laid out, is our base case next year. We still think this economic recovery is alive and well. Maybe we're going to do a little bit better if you look at what that GDP report just did. Everyone's shaking their head. How in the world that happened? Because the consumer is still solid. Balance sheets are still solid. Corporate America is still growing and profit margins are solid. So almost 7 out of 10 times when you don't have a recession during the year, the S&P 500 is up at least double digits. Only 5% of the time when you don't have a recession are you down more than 10% on the year. These are just big numbers. Yes, we're looking at 3 really good years in a row, okay? You got to go back a long time. I think it's late 90s. The last time we saw 3 years in a row up 15% or more. I'm sorry, 4 years in a row. We're going to have 3. Now we could have 4 next year. I wouldn't be shocked at all if we did. Our base case is next year probably gains between 12 and 15% on the S&P 500. That's where we were this year. We never cut our targets back in April when the S&P was down 15% for the year. We looked up. It was a long way away, but we stuck with it. And fortunately, we have come all the way back, as we know. So don't sleep on 2026. I shared this exact chart with you last month. I thought it was interesting, though. Midterm years tend to have the largest correction. A lot of people hear this. A lot of people know this. Midterm years usually aren't that great. Think about the last 2. 2018, 22. Not good years. Not good years. There were some policy things taking place, though, that caused that. I mean, we had kind of more of a hawkish Fed in 22. That's why, 18. That's why the Fed, the market fell apart late in the year. 22, of course, had the terrible war that started inflation. So it is what it is. I'm not minimizing it. But be aware, you tend to have volatility and weakness at some point in the midterm year. This one's not going to be different. But a year off the midterm years, the S&P's never been lower, up, 31.7%. No, I don't know when the lows are going to be, unfortunately. But we're going to have lows at some point next year, and it's probably going to be an opportunity going forward. The slingshot, I think I have 2 more, guys. The slingshot effect. When you're down, 15% for the year, like we were at this back in April. But you finish the year up double digits. Pretty darn rare. 82, 2009, 2020. Think about those years. Scary moments clearly early, came back. How did the next year do? Well, you see it right in front of you. Sample size of 3, I get it. Not a big sample size, but I'd rather know than not know. Up almost 20% on average a year later. Why I think, again, this slingshot is real. And yeah, I think this is the last one. Bull markets, right? This is the 4th year of the bull market. It just turned 3 years old a couple months ago. Your average bull market, the last 50 years that made it this far, made it to at least its 5th birthday. On average, it went 8 years. The longest was 11 and 12 years. So this bull market's in its 4th year. I mean, it's getting older, yes, but by no means does that mean the bull market has to end. And we just play with some numbers here and show that normally the 4th year does well. 3rd year is kind of choppy. A year ago, and I was on to talk with you, I said, hey, 3rd year's bull market's choppy. might be kind of frustrating at times. Well, gee, we had a bear market back in April. We had a bear market back in April. That shook the tree, but that's kind of standard third-year bull market stuff, as crazy as it might sound. No, we didn't think there'd be a near bear market, but we did say in our outlook probably almost as much as a 15% correction at some point this year, because we've gone 2 years without so much as a 10% correction. We were simply due. And then Liberation Day, President Trump pulled up the piece of paper. We all know what happened next. 10.5% drop in 2 days. Nope, we didn't see that coming, but we also hung tough in late April, saying the lows were in and a huge summer rally was coming. And fortunately, that has what has happened. All right. This is when I say you still hear me. I didn't just get disconnected, because that would be a disaster.
Wow.
Yeah, we'll see you guys.
We hear you. We're going to put you onto the full screen here, Ryan.
There we go.
Get yourself a drink. That was an incredible presentation here. You never let us down with your stats. Like, there's so much information there.
Yeah,
so I could go anywhere with the questions here, but I'm going to go to the slide that you show with Jensen Wong and Time Magazine Person of the Year, because I have been calling for 2026 to be the year of value, where we actually see value stocks start to come back. And, we've obviously, the last 3-4 years, it's been AI, well, at least the last 2 years, AI, but technology. Stocks really in the last 2-3 years of this bull market have led the charge. Nvidia up 1,000% from the lows.
Right.
AMD, we've talked about all these sexy technology stories. But left in the dust has been the drug stocks. Left in the dust have been, even some of the staples. Left in the dust, the home builders sitting near those. There's a lot of stocks that are trading 10, 12, 13 times earnings. They have started to show life in the last couple of months.
Yep.
Does that life continue into 2026, or is this just another, fool me value stock rally in the last 2 months? I think it could, but I want to get your thoughts.
No, great question. What do we call it? The Charlie Brown and Lucy scenario, where the football's out and he thinks he's going to kick it and she pulls it away. I mean, believe me, value investors have felt that way for a while. Honest to goodness, a globally diversified portfolio. 2017, yeah, you should have a diversified portfolio. This year, yeah, you should have a diversified portfolio. And then you blink 3 years later, maybe I should have owned all large cap tech the whole time. But to answer your question, yes, we think there absolutely will be more dispersion. There absolutely will be different leadership. I guess technically you consider financials and industrials value, right? I think they're in there. So those are nice. You look at transports. Transports are going nowhere for 4 years. There's some value in there. Now, pure value, when we hear value, you think more sometimes think defensive, like staples. We're not too warm and fuzzy on staples, I guess. But the reality, there's 11 sectors. Every single sector is higher this year. That's fairly rare. Even in a really good year, sometimes there's a down sector, and that's fine. That's perfectly normal. But I think this dispersion we're seeing, and if you say you like value, to me, and I hear that, I think developed international. Because when I look at the makeup of Europe, there's not a lot of tech over there. There's not a lot of comms over there, right? Communication services. It is a lot of financials, materials, industrials, those areas. So I think that's maybe an easier way to play value, is to have a diversified portfolio, Dennis, with some European developed international exposure, maybe a little bit of Japan as well. So yeah, I know people have been saying it for a while that the market's going to broaden out, and we're seeing that this year. People sometimes don't seem to believe it. We're seeing that, and I don't think it's a one-off. I don't think it's just this year. I'm with you that value. Could value be up more than growth in 12 months from now? Absolutely. Will we have a ton more? I don't know if a ton more, but I think that's why you keep a diversified portfolio and just don't ignore those value names, which again, I guess technically utilities are a value, although I think most of us now kind of look at it a little interesting because there is that clear component to it. But again, that's one group that we do have an overweight. And I get it. Utilities not done well the last 2 months. But we've got other parts of our portfolio that has. And I think utilities do just fine this time of year from now, especially if value comes back.
Wow. Ryan, a mouthful. I was coming up to say something, and then your next slide, you would cover it. And then I was going to say something about rotation and tech, value, and then Dennis takes that. But I do have a curveball. What did he say?
That was going to happen. Want to talk
football?
We'll have this conversation offline. Okay.
He was mad at you, Ryan. He was like seeing your tweeting after the game, and he was not pleased. He's like, I don't know. I may have to ban him from the show after all this tweet storm against Michigan.
Yeah, well, that's true. I had a lot to get off my chest. I'm sorry.
Yeah, I guess 4 years of beat downs.
Yeah,
I
yeah,
don't.
you're getting yelled at for 4 years, Yeah,
Yeah.
it's true. I felt
Okay.
like a
Okay.
transport finally
Market.
breaking out. Like I
Market.
wanted my moment in the sun.
Focus. All right. So you're talking about all these positive things and all
Mhm.
these different sectors and all these things that are, which is good, right?
Mhm. Yeah.
But to me, a bellwether for the economy and the stock market has been the housing sector.
Yep.
Okay. So it a lot of different ways that, durable goods, right? Appliances, financial services, employment, builders, realtors. That's not looking good. That's not having a good year.
Mhm.
Can we continue to just chug along like this when we have a housing sector in the dumps?
Yeah. Well, do you think about what the weakness of the economy? You just nailed it. Housing, small businesses, small business confidence. I mean, those are the issues that are out there. At the end of the day, those areas don't like higher interest rates. As I kind of laid out, I think there's going to be more cuts coming next year than what the market or what the Fed fund futures or what the dot plots are saying as inflation continues to kind of come in a little bit more than was being priced in. So those are the areas that can help. But you're absolutely right. If housing truly spirals out of control, then we've got a bigger problem. If you start to see small businesses really stop hiring, which honestly we kind of have. ADP does pretty good work on this stuff. We have seen those areas that have clearly struggled. So I guess I am a glass half full type of person, maybe by nature. So I think with the lower interest rates, and I think after the shock of what we just saw, we're going to come back. But those are some good points. And let's just not forget this one. I know, even Mr. President talks about this. The Fed's going to cut interest rates, so mortgage rates have to go lower. No. The Fed only controls the short end of the curve. They can't do as much on the long end of the curve. And when I look around the globe and I see Japan 10-year yields breaking out to 30-year highs, I think, on the 30-year highs. First time they hiked rates 11 years. Not just one country, but I mean, there are global yields that are moving higher. I do think the higher global yields that we're seeing are a sign that the economy is good. Look at those are nominal yields. Look at real yields, right? Adjusted for inflation. Real yields in the U.S. have been going higher as well. So Sony's been talking about this. And listen, that is saying the market, people say, oh, yields are higher, has to be inflation. No, not at all. Look at real yields. If real yields justify that, says there's probably stronger growth coming as well. So it is a double-edged sword here. What I'm saying, kind of talking on both sides of my mouth. I do think the longer-term yields will go lower next year. Our base case this year was bonds are gained between 4% and 7%. Well, bonds gained like 7%. This is the best year bonds have had since 2020. All right. Not great, but gee, that's a lot better than where we've been. We all know gold's up 60 or 70%. We know the stock market's up 20%. It's up 30%, developed international, 30% emerging markets. So it has been a really, really good year. But you're right. Those are some of the cracks that are out there along with the labor market that could topple everything. I don't think we're there. I mean, hopefully we'll see more data that shows us if that is the case. But it's one we're watching closely, I guess, to put a bow on this.
Okay, good. I mean,
Yeah.
would you be, based on the interest rates? I mean, is it, I know individual stocks, but this XHB, I mean, based on the scenario that you're laying out, is this something that we should have on our radar?
Yeah, I mean, that's a big part of consumer discretionary, right? The housing market and those. So I think absolutely it should be. I think again, if the consumer can come back a little bit and the labor market can improve and we get those lower yields, across the curve, those all are net positive probably for housing. I'll be clear, we don't really have a strong view on housing or housing stocks specifically at the Carson Group, but big picture, we're a more even weight consumer discretionary, and I think there's some. But my problem with consumer discretionary, and you guys know this, right? It's Tesla and Amazon. It's just two stocks, So that's like okay, housing might come back a whole bunch. It might not matter if those other two names are down or vice versa, but still, from a allocation point of view of the portfolio, I think that's a group clearly to watch because if the kind of like our earlier conversation of value and some of the beaten up areas the last 4 years take the baton back like we think can, you'd have to think housing is going to be almost a leader on that taking the baton back.
Okay. Ryan Dietrich, Chief Market Strategist over there at the Carson Group, a fantastic contributor to pre-market prep the entire year over the years, and it will be continuing in 2026. Ryan, can't thank you enough for your contributions to our investment community.
Well, no, it's an honor. I have fun joining every month. I think I had a record number of charts, but I think we hit them all. So, guys, I really
That's
appreciate
awesome.
it. Happy New Year, happy holidays, everyone. Appreciate it, and I'll try to be nicer on my tweet storms when I get fired up next time. But
Think
yeah,
about
hope everyone
Joel.
enjoys some
Think
football
about
too.
poor Joel sitting back there.
All right,
Thanks,
guys, we'll
Ryan.
see you.
All right,
Thank you.
thanks,
Bye-bye.
Ryan.
Think about poor Joel. We're always thinking about poor
He was
Joel.
really angry.
Dennis.
Like Joel was like, I don't know if I can have Ryan back on the show after this.
He's a
We haven't-
sensitive boy
We
sometimes.
haven't
Yes.
banned anybody in a while, have we?
Are you looking for
He's like, I
someone?
want to ban him from the show after this Michigan, after this tweet storm and all this hate towards Michigan's football. I was like, I almost got to ban him.
No.
Brentster, you got a message for us?
I do. I want to say thanks to our wonderful sponsor, Hive Digital Technologies, sponsoring PreMarket Prep, the global leader in building and operating cutting-edge data centers from Bitcoin to high-performance computing. Hive is redefining the future by powering the world's most transformative technologies like AI with efficient, green, and clean energy. They have 100 megawatts of data centers in Canada. They have almost 50 megawatts of data centers in Sweden, over 300 megawatts, strategic expansion in Paraguay. There is a little QR code in the bottom right corner. Can I point to it? This is kind of tough. It's right there. Scan that with your phone. You can get over to hivedigitaltechnologies.com to learn more about Hive. Thanks again to Hive Digital Technologies.
All right, that is going to be a wrap here on this December 24th here, Christmas Eve day. Guys, have a great day tomorrow. We'll be joined by Ryan Craver on Friday. Dennis, you threw me that retail question. That will be answered by our in-house retail expert. Everyone enjoy the times, with your family. Stay safe and treat everybody with respect.